This is your investment update for May 2016. Kind of a quiet month, not really a lot to go over this month. The S&P 500 was up 1.79% for the month, so a decent month for stocks. International stocks were marginally higher. Bonds domestically were really flat. Nothing really happened in the bond market, and the international bond market cooled off a little bit. It was down about 1.3%. That's to be expected. They had a humongous rally for the start of the year, so that's just probably the prices they're starting to settle in a little bit. Commodities, oil's doing better, which is kind of helping the overall tenor of the global economy, and all's been really quiet on the central bank front since that G20 meeting we keep talking about. Although the Fed did issue a hawkish statement towards the end of the month that made it sound like they may raise rates in June, which will be interesting, so we'll keep watching that. But based on the jobs report that came out last Friday, the 3rd, that seems highly unlikely. There was a huge miss in the non-farm payrolls number. Non-farm payrolls came out at 38,000. It was expected to be 164,000. So that's a big miss, and it's a one data point. It's 1 month. It may prove to be anomalous, so we'll just continue to monitor that. But what you don't want to see is getting into a kind of a stagflationary period where you have higher than normal inflation. Inflation's been ticking up, and you have growth starting to slow, and then you have you kind of have these two negative things that you usually use rates to counteract. So if you have inflation picking up and you have those kind of things happening, you want to raise rates. Well, you can't really do that if jobs are going down and the unemployment number starts to tick up and growth is slowing, because then you make those worse. And so the Fed kind of gets themselves into a box, and they need to do something, but they can't figure out what would be. You're picking between two bad options. So it's probably a little early to start worrying about that too much, but that is on our radar, and we continue to like the way we're positioned heading into that kind of an environment.